Howdy, hotshots. It's the Dividend Daddy, your favorite, not a financial advisor with not financial advice. Ulti is still cranking and banking. It's moving back up. I know a lot of us are in the green now, a little bit more in the green than we even were last week. So things are looking good right now. A rate cut will absolutely affect Ulti. And even worse, a negative rate cut, like if they go in there and they say, oh no, inflation's still rampant, we were going to cut it 25 basis points, but now we're not cutting it at all, that would be bad for the market overall. However, here's what I have to say about rate cuts. So we know that rate cuts are monetary easing, right? It makes it easier for companies to get money. It makes it easier for individuals to get money. People will go out and spend more money, which means that they borrow more money. And here's what we know about borrowing money, okay? Inflation is created at your bank. So people think that the government creates inflation. They encourage inflation, and they do that through rate cuts. They might create a little bit of inflation through borrowing money into existence to run government programs and things like that. So they are creating inflation by borrowing money, but borrowing is how inflation is created. So we could take every dollar that there is in existence and pay it back, and we would still owe interest on it. So it's impossible to pay back all of the debt. Now, if they abolish the Fed like they should and go back to some sort of a currency that isn't a fiat currency, a fiat currency is currency that isn't based on anything except the faith and credit of the government that issues it. So this is the longest that a fiat currency has ever been a major world currency without collapsing. Right now, the dollar is. And we are really struggling to stay afloat with the dollar. We really should have something backing our dollars, whether it's a basket of cryptocurrencies or a basket of commodities. Like we have a very strong agriculture industry in this country. We have a lot of energy supplies. We have gold and silver in the ground. We really should be backing the currency with something. But the reason that they don't back the currency with something is because the government wants to spend more and more money. They just want to spend as much money as they possibly can. They want to spend it without any kind of ramifications, okay? They just don't want to cut programs. They don't want to have all of the stuff that they have earmarked taken away from them. And they want to inflate the currency. That you don't have a currency that they want to remain flat. They want to inflate it. So they inflate it with a goal supposedly of 2% per year, if you can trust anything that they say, which means that they intentionally steal 2% a year from you. They steal 2% from your savings. They steal 2% from your incomes. You have to get raises just to make up for inflation. And sometimes that inflation gets out of hand, like all of the money that they spent during COVID. I know there's a lot of Trump supporters out there who think that he's great for the economy, and he really did make the stock market boom last time he was in office. But the bottom line is he signed all of those bailout bills. He signed all of the things that I was hoping that he, as a businessman, would see were ridiculous. He signed them all. He let all of that go on unchecked. All this free money got handed out. And I'll tell you what, the individuals got a lot less than the businesses. He gave money to the businesses. He allowed money to be given to the businesses. And that created all of the inflation that we have today. They hired people that they didn't have to hire. They kept people on the payroll that shouldn't have been on the payroll just so that they qualified for these huge endowments from all of these COVID programs. And that has led to the inflation that we see today. That's why your groceries cost 4 times as much as they did 5 years ago. And they'll say that the inflation was only 8% or 10% or whatever it is they try to claim each year. But you and I know when we go and buy goods that there's a lot more expense shelled out on a weekly basis for energy costs, for grocery costs, for any kind of thing that you need to live. They really are raking you over the coals. And they're able to do that because of all of the inflation that has happened the last few years. And then they claim their supply chain issues and stuff like that. But we know that those were short-lived. So that really isn't an excuse for why things are still elevated in price. But you see those prices starting to come back down now, which means that we are probably on the verge of an economic correction at some point in the near future. When that will happen, nobody knows. So it's not like I'm running off and selling all of my stuff. They've kicked the can a lot further down the road than I ever thought that they could have. So you can't wait forever, because what do they say? The market can remain irrational a lot longer than you can remain solvent. So you can't really time the market. You can look at trends and try to hop on trends, like the AI trend is obviously going to be replacing a lot of jobs and making it a lot less expensive for companies to acquire a lot more a lot more customers. So obviously AI is a big deal. Now, which companies are the winners in that? Well, obviously we see like NVIDIA, the chip maker. It's like selling picks and shovels during a gold rush. They're selling the hardware that the AI runs on. So basically anybody who wants to run AI has to be in data centers. They have to have fiber optics. They have to have microchips. They have to have a lot of things to support the infrastructure that they need to run their AI on. So there's AI companies that will be the biggest gainers. They just will be. There will be some AI company that comes out that'll be just the biggest gainer, like Palantir is. Palantir is a huge AI play. But you don't know which ones those are ahead of time unless you're somehow in the know or you get lucky. But we do know that equipment is going to be needed to support all these things. Now, there's probably going to be some dark horse small company that comes out producing equipment, and it'll have a big boom too. But you could just invest in funds that focus on that sort of thing, like Chippy, CHPY. I'm going to put more money into that because I think it's a long-term play and good income in the meantime. So I'm probably going to pile some more money into Chippy. I call it Chippy. You could call it whatever you want to call it. But monetary easing, a rate cut, is going to benefit the entire stock market overall, because what it does is it creates a risk off to risk on mentality. So a lot of people right now, they have their money sitting on the sidelines. They're waiting for a correction. They're getting a pretty good interest rate from short-term treasuries, from high yield savings, from government bond ETFs. They're getting pretty good yields from those compared to what we've seen over the last 25 years, really. And so they've got that money sitting on the sideline, and it's not costing them all that much in opportunity. But as the rates get lower, then those rates will come down too, and then it costs them more and more opportunity. So money will move out of those risk-off assets into risk-on assets, i.e. the stock market and real estate, and that will probably cause a boom, a long-term boom, as long as they lower the rates periodically in order to keep that money easy. Another way that this benefits the stock market is that companies can acquire money easy. So they refinance bonds, they have more free cash flow, and then they'll buy back their own stocks, increasing people's equity that own the stocks that are left on the market. So that's good because that drives their stock price up and it makes their investors happy. Right now, they've probably already gotten a 25 basis point cut priced into the market. So do I think there will be a big boom if we see a 25 basis point cut? No, I don't really think that we will. I think that we might even see a little bit of a sell-off. Maybe not the first day, but within a couple of days, I think we might see a little bit of a sell-off because you buy the rumor and you sell the news. So if that 25 basis point cut is baked in, people will then, okay, we got our profits, they'll move out and they'll wait for a little bit of a dip and they'll go back in. Long term, I do think, actually short to medium term, I think it would be good for the market. Lower rates will be good for the market long term, but there's of course other factors that can affect the market. So there could be some sort of black swan event, there could be some sort of shortages, there could be a cut in the labor market, which will probably be softened by lower rates because people will hire more people if money's cheaper for their company. But AI is going to cause a lot of job losses. There's already been a lot of job losses. And if you notice, the government comes out with a report every month and tells you what the job losses have been. They wait for that to sink in. They wait for people to get over it, whatever it is. Sometimes it's a positive number, sometimes it's a negative number, and they'll go back and revise it down. It always gets revised down. It never gets revised up. So there's some monkey business going on there. But for Ulti particularly, they're dealing in high risk stocks. That's what they're, high volatility, high risk stocks. Those stocks a lot of times don't have any earnings, or their earnings, their P/E is very, very high if they have a positive P/E at all. Those companies rely on debt. That's how they operate their companies. They only have so long of a runway with whatever money they have on hand, and they have to continue to borrow. If they can refinance the debt that they have and they can more easily acquire new debt, then that's going to be beneficial for those companies. So along with, somebody in the comments the other day said, a rising tide lifts all ships, right? That's a great analogy for the market. So the lower rates will raise the market overall, and that will pull companies up that Ulti's investing in. Maybe not every one of them, but just in general. And then in addition to that, those higher risk companies that Ulti's investing in are going to be able to get more and more money easier, which means that they can, invent things quicker, they can implement strategies quicker, they can hire more people, and they get a longer runway because they have more cash on hand, even if it's borrowed cash. So I absolutely think that any sort of a rate cut is good for the stock market overall, and it is good for Ulti. Now, if they come out with a 50 basis point cut, I think that we're going to see a very nice pop in the market overall, and in Ulti too. If they come out for some reason and say they're not cutting rates, it's not going to be good. So I don't have a price target on Ulti. It's so hard to, I've told you before, I don't think that the charts are useful. I don't think price targets are useful because they're moving in and out of different stocks all the time. Like I'll have to go look, but I thought I saw somebody saying that they just moved into Tesla, which is a good move if they did, because Tesla just has been on a pretty nice run. So hopefully they did. At least for the gains that we got today. But they could sell out, even if they got it, they could sell out of it tomorrow. They move in and out of position. So you wouldn't take 5 different stocks and put their charts end to end and think that you've got some sort of formula that can predict where that stock is going. Because it's 5 different stocks, and end-to-end charts don't really matter, because you're like, well, what good does this do? I can't chart any resistance. I can't chart any support if you're into that technical analysis. That's the same thing you're doing if you're looking at an Ulti chart. You can look at an Ulti chart for their overall strategy. You can go, well, how is their strategy performing? Is it, is it keeping the NAV level? Is it just constantly driving the NAV down? That's a good reason to look at Ulti charts, because you want to just see if their strategy is working. If you're trying to do technical analysis on those charts, in my uneducated, not a financial advisor opinion, that's completely useless, because you're looking at a potentially different stock every day. Because the Ulti shares, the Ulti stock, is holding a different basket of stocks every time they sell in or out of positions. So it's a whole brand new set of stocks the next day. It's literally a different stock when they do that. It's not like you've got the S&P 500 and they only change it every once in a while when one company gets added and one company gets booted, right? Overall, that is the majority of the market stays the same. The majority of the S&P 500 stays the same. So that is, in general, the same basket of funds. So you want to go chart that? Okay, go ahead. But if you're in an actively managed ETF that is buying and selling different stocks every day, you can look at the performance to see how the traders are doing, how the fund manager is doing, how their strategies are doing. But to try to, here's another problem with it. People still think, they show up in the comments every day. And I've gone over this, 20 times. They still show up in the comments every day saying, oh, well, these people are selling and driving the price down and I'm buying those shares up. Well, we've talked about this before. It's an open-end ETF, okay? It's not a closed-end fund. It's an open-ended fund, which means that there are new shares created when money flows in, And if a bunch of money flows out, those shares are destroyed. So you're not driving the market price. You might be able to move it a penny or two, or aftermarket hours when the fund managers and the APs that handle buying of the stocks and selling of the stocks in order to create and destroy those shares are not at work. You might be able to do it in a small pool, like they did on Robinhood that one night where they drove it down to like $4.59 that I wish I'd have been able to snag some shares. Okay, so you could do that maybe, but you're not going to move it throughout the day for any amount of consequence. Like maybe we can be at a 0.2% discount to NAV. We can move up to like a 0.15 premium to NAV, something like that. But unless you see that NAV premium or discount very far detached from the NAV, the market is not really moving Ulti. And I think I mentioned it before, where maybe as kind of a throughput through Ulti, we can move the market, because if a bunch of money piles into Ulti and they go and buy a stock, they might move the market on that one stock, which might in turn change the NAV of Ulti. But overall, they're not impacting the market by buying or selling Ulti shares, okay? So, it's nice to have a bunch of assets under management. People talk about it as if it's a good thing that they have like however many billions of dollars. Was it like 4 billion under management now? Maybe they've lost some in recent weeks. But I actually don't think that's good. I would prefer it to be a smaller fund so that they're more nimble, so that they can get in and out of smaller positions, and they're not moving the market as much when they do make moves, and they don't have to have as many stocks to be managing as they do when they have such a high asset under management number. So people think that that's a good thing. I'll probably have to do a video just on that, because I don't want a bunch of assets under management. Like, I want it to be liquid, but I don't want it to be like gigantic. I don't want this gargantuan just lumbering around and, kind of trying to bounce off the market here and there because they just can't fit in where they want to be. So anyway, long story short, low rates, good for the market. No rate cut's going to be bad because they already got that 25 basis point baked in. 50 basis point probably be really good in the short term, but long term, we don't know what's going to happen with all of these other metrics that could, negatively impact the stock market or positively impact it. So all we could do is just keep adding a little by little. And I've learned that over my life. I've been trying to trade stocks and things like that my whole life, instead of just gradually putting money in. And I'll tell you one thing. I'll save it for another video. Anyway, you degens have a great night, and I'll talk to you later.